everybody. Welcome to your weekend edition of the TraderMerlin show. I almost said a totally different show right there. It's probably because I've been celebrating all day. It's been a wild ride today for those of you who, of course, your regulars here. Most of you, it's been a lot of fun. So I will just say cheers. I'm going top shelf today. A little bit of Blanton's. I'm going with the Blantons. Good stuff for good markets, great trading days. So cheers, everybody. Hope you had a great trading week. And I hope you're short right now, as am I. Let me get a good sip of this, and we'll get things started. That's a goodie there. All right, here's the topic for today. Trading week wrap up. I hope you like the graphics there. I have the Nasdaq burning on fire. Now, this isn't, of course, the end of the end. It's not the worst that could possibly happen, but take a peek at the Nasdaq today, down almost 3%. So far, things are lining up right with the way I want them to go. Rob says you nailed it. I won't say I nailed it, right? I'm on a winning trade right now. I've got a really good... I actually added more to my position today. I'll tell you about that in a second. But, I've got a good winner on. That's really what's important. And now it comes down to management. We'll see if we can get more downside move next week. But, here's the challenging part. Markets are closed right now. So now I got to wait. You've got a great position on. It's one of those things like, well, do you take some profits off the table going into the weekend? Because, as leveraged as options are, and as many of them as I have, it's really one of those situations where you're like, do I want to be greedy? Or do I just be happy with a great profit today? I mean, that options position for the whole thing, I'm up over 50% on it in just a couple days. So that's great. But I did not sell out of any of them. I kept them. I actually have 40 Russels now, and I have 30 S&P. So I added on the gap close, which I'll show you here in just a second. But all in all, been a pretty fun day. So let's dive a little bit deeper into this chart. And we'll go from bottom to top. We'll work our way from worst to first. Now, here's that Bitcoin price chart. I got all kinds of noodling little lines here, so I'm just going to get rid of some of this stuff. Right now, you look at where we're at with Bitcoin. I mentioned this in the CIL, my Crypto Investor Live program. Until it closes above 45,000, I'm not bullish. I'm still bearish. And here you go. Today, a nice follow through to the downside, down about 3.7% for Bitcoin. Do we challenge these lows down around 36? I hope not. But the downtrend has not been broken yet. So, the likelihood is stronger this thing will continue down, even though I'm still holding Bitcoin long in perpetuity. Now, we'll move up. There's your Nasdaq. Ugly day. I mean, two just horrifically gigantic candles for anybody who's bullish on these markets. The last 2 days have erased pretty much a week and a half worth of gains, and did so very quickly. Now, I actually still have QID open, so I am still long QID, which is a double short Nasdaq. So there's that. That was a good winner for me today as well, but really the bulk of my gains came off of this one today, which was the S&P 500, which shorted a perfect double top. You had a great double top. It now broke below the bottom of that yellow box, which means that it's closed below the low for like the past week and a half. That's very significant to me. So I ideally would love to see this continue to follow through, maybe even fill out this pattern. I tell you what, again, if this pattern comes to fruition, I'm going to be one seriously happy person going forward. But that's a long, long ways away. And as Les said in the comment down below the YouTube video yesterday, the markets do what the fewest people expect. So, if everyone thinks the thing's going down, it's probably going to go up. So I want everybody to be bullish. I need everybody to go out there and be bullish on this thing so my puts make a lot more money on. But you had 1.75% down for the S&P. What was beautiful about this one today is if we go to a 5-minute, right where my, let's go, the S&P, let's go SPY. And I'll take out the extended hours trading. Okay. So you guys can see on the SPY up here, from yesterday, we had that gap fill, and that's where I added some. Today, you really didn't get much in the way of gap fill. It rallied up just a hair on the open, and then just plummeted from there. So on the open, I added some more. I added 5 more S&P and added 10 more Russell. So again, I'm in 40 Russell, 30 S&P. I was debating adding some later on in the day, but I don't want to get too aggressive. We're really starting to see a lot of volume on the S&P. So you had some pretty high volume spikes today. Notice down at the bottom on the SPY, look at the volume today, right? This could be considered a capitulation type of moment because volume was so high compared to others. Now, if I go to a daily, you can obviously see the volume bar. Certainly picking up some momentum. Second gain in a row with regards to volume bars. So I'll keep an eye on that. It's not really capitulation when you look at it like this, but on the 5-minute, it shows a lot of activity going on in that 5-minute bars on today's trading. So you saw the last time we had a climactic volume was back on January 24th when we had the huge sell-off down day and then a rip back up. My guess is we'll continue to drift lower here. If we get some more big candles, we'll definitely challenge this low at 420 on the SPY. And if we break that, hallelujah, you'll be hearing me screaming down the hallways. Enjoy. Dow was only down 1.2% today. Again, similar picture. We had the engulfing pattern yesterday. And if you are a candlestick person, perfect. You have some good opportunities to play these, as I mentioned, by just breaking the lows. If you broke the low of yesterday and that was your trading plan, you had a great trade on today on the Dow. All in all, still looking pretty bearish in my opinion, at least on the shorter term time frame here. Then we go to the Russell. So added a little bit to the Russell. This one I was a little bit skeptical on just because the Russell has been showing a little bit more strength in the other indexes because it's broken up. And you came, like I say, up to 2100 where I added some yesterday. I put 10 on there and I put 10 on today in the morning. And all in all, this is the one that I'm questioning the most. It's starting to look bullish. You notice the last month has been higher lows and higher highs. So it's a short-term trend is moving up, whereas the intermediate trend is still down. To me, the intermediate trend should win here, but if I'm wrong, I'll get out if it gets above 2100 on the Russell 2000. And then, let's see, we got gold. Loved gold today. Look, we have something to talk about, everybody. We could talk about gold. It finally broke out of this crazy pennant formation that's been intact for over a year. No more price compression. Commodities might be in play. Here comes gold. Hallelujah. Hallelujah. I need sound effects on the show to really drive home the excitement level that I'm having. And that's not the whiskey, folks. That is just, I'm so happy to see gold finally ripping out of something. Now, obviously, it breaking out of this pennant formation is very good news for anybody who is bullish. I saw some comments earlier in there said, cheers to all the gold bugs. It was from Rob. Hello, all the gold bugs. And Christian saying, good day for gold. Yeah. Great day for gold. It's funny because it doesn't look like a monumental rip. It was only like 1.25%, 1.27. But still, we're finally doing something different. We're outside of these psychological rails that it's been stuck in. Now, the next big challenge, of course, we'll just keep doodling on this chart till it makes a picture we want to see. Let's go and draw a box here. It really depends on how you want to draw it, but most people are going to draw it like that. Right? That is now your overhead supply. We are in it. Now, I don't think that the box, personally, should be drawn like this. I know a lot of you who are OTA grads, you can say that's where it should be drawn, and I get that. But you can see right here on January 25th, price already went into that zone, therefore it's not as strong, in my opinion. More cowbell, John, more cowbell. And for me, I like to draw my zones where they're just really difficult to get into, so I would put it more like this, where I'm just capturing in the tip, kind of in the deep zone there. Just the tip, folks, just the tip of that candle. And today you had gold rip up to that level where it would have been a logical point to exit out of some of your long position. So great that we broke above this trend line, this downtrend line, but we still have this next big obstacle. And of course, once we break that one, you're looking at 1900 on gold. So to me, some good, oh, dang, Alan. Sorry you closed your gold. And I see why. Don't feel upset, Alan. You'll be probably upset with yourself because you missed this big move today. But if you close it yesterday, did you do the right thing? Yeah. Right? Because we're coming up to that downtrend line. Probability was higher that it was going to bounce down off this. How do we know probability is higher? Because that's what it has been doing, right? So I'm sure it's frustrating, buddy. Don't let it get to you. It is what it is. Shrug it off and move on to the next trade. So, yeah, that was sure that didn't feel good to watch that nice game today, but you can always get back in. It's all right. And then number one, crude oil with a very nice rip up. You guys might remember a couple days ago, actually I think that was on Tuesday, there was a question about where is the buy point on it, and I said, well, as it comes back down to this last area it took off from, which is about 88.25, it gave you a couple challenges there, a couple taps to it, and now all of a sudden breakout. So the question now becomes, where is oil going to be headed going forward? I can get rid of a lot of these artwork here. Get rid of that one, we'll get rid of this one. Where's crude oil going? I got to go back to a weekly to find some zones on this bad boy. It's way back here, and we already have them mapped out, right? We've got this 100 mark and the 106, but as of right now, you're almost in uncharted territory. smooth sailing territory, I like to call it. Where is it at here? So the dotted line represents where it is at right now, which is right here. And you notice on this weekly, if we go all the way back into 2014, that's right, it has not been at this level since 2014. You notice that that is really where you had this drop, a little bit of a base, and then an aggressive drop out of it. Right? That's the last move. That's right where we're at, which is right where I'd be thinking, okay, I might take a little bit off the table just because we're coming into overhead supply that was a huge move down. Now, granted, are you getting out of here now as this thing just starts to have a break and really run? That's tough. I mean, this has been a absolutely beautiful bullish chart on crude oil for months now. Joe says 120 by June. By June? I mean, you're talking 120 would be about a 25% move from here in just a few months. I don't think you're going to see it rally that much, and here's why. I think that the current administration is going to shift course here because now every American, regardless of political party affiliation, is going, hey, what the heck is going on with gas prices? You know, I don't want to pay this much at the pump. And as you go towards an election or you want to have favoritism towards your party, you're going to do whatever it takes to squash that. So we'll see. Who knows what he could do? Maybe work some deals with Saudi Arabia, put some pressure on the Middle East and OPEC to increase production, therefore bringing prices down. But I mean, certainly 120 by June is possible. I think we should first target ourselves on 100. 100 is the most logical, obvious target that's directly in front of us that we haven't gotten to yet. We're, at 93.70. That means you got about another 8%, somewhere in there to get to that level. Certainly, I think that is doable, but I wouldn't set my sights on the 120 yet. It's possible, no doubt, but let's shoot for 100 first and figure out how we deal with it once we break above 100, if we break above 100. And that is your top 7 markets for the day. And yes, I see a lot of comments in here talking about Putin and the issue going on over with Ukraine. Absolutely, that was a catalyst for today's market move. A little bit of uncertainty going into the weekend. What was a little strange was the way we had a pretty nice rip up right near the end on the equity markets. Let me just show you the 5-minute time frame here. So, we kind of stalled out, and then right as the market closed, actually, we started to move up, but really a lot of hesitation near the end. This is the Russell 2000. You can see the big aggressive sell-off kind of midday. Now you have that. You have the S&P, which, stalled and started to bounce back up near the end. But still, that momentum, I feel like, is just overall negative. Nasdaq as well. All the picture looks the same. But yes, it definitely helped this market as people were going, you know what, I want to get out of my positions, liquidate my portfolio just in case, something happens and I end up holding positions as they go to war, which will probably create a knee-jerk reaction on Monday. Now, if it does happen over the weekend, which hopefully it doesn't, I mean, nobody wants conflict or the senseless loss of life, but unfortunately this stuff happens. If it does happen, you'll probably see some pretty big downside moves in the equity markets going into Monday morning if we do in fact get it. All right, let's see. What else do I have? Oh, let's talk about 2 things. Talk about bonds and talk about the dollar, right? We've kind of made that the focal point over the past couple of days is looking at what the dollar is doing. Here's your daily on the dollar. We're starting to see a little bit of a bounce up. I am very bullish on the dollar. Not a little. I'm very bullish on the dollar going forward. I think you're going to be challenging this 100 mark on the dollar index coming up here soon. Now, to put that in perspective, how long has it been since we've challenged that mark? Well, we go back into 2020. To me, that's your next big stop on this one. Obviously, where we're at right now, which is 96, you'll have another stop right around 97.75. After that, we're going straight to 100. Now, remember, the more the dollar rises, the more pressure it puts on the equity markets to go down. Makes things more expensive, makes our costs for anybody internationally buying our goods and services, their costs have now gone up, so they will inherently buy less. But a minor a minor encouragement would be okay. Big Ev, as greedy as I am with the financial markets, I still put human life well above my portfolio. So no, I don't want to see innocent people getting killed in all of this, but a minor one. If there's no loss of life in the conflict, hey, storm the borders. Let's see those puts tank tomorrow or on Monday. Okay, and then lastly, the bonds. Let's see, let's go to that 10-year for you. So if we look at the weekly, it was very interesting what happened today. So we had that one-day rip, right? A really aggressive rip up, and then basically gave it all back. Some people call this a tweezer top. So rip back down. The question is this going to continue back and get us down to, let's say, the 178s, 179 area, or is this just coming right back to the origin of yesterday's move and going to hesitate there? What I like is, if we look at the weekly, you got a gorgeous shooting star. You have a gorgeous shooting star on this one. I don't know if you guys can see that, and I'll make it a little bit bigger for you. But you know my rules on shooting stars. You put a line right underneath the low of this day, and I'll do it, and I'll make it a different color. I'll put it right there, and I'll make this, I don't know, some color that I can actually see. We'll go style, and we'll make this blue. All right, so that blue line is the short point. So if you are trading the yen next week, you're trading that 10-year futures product. Remember, if this is the bearish version of it, then the futures product will be bullish looking. Right? This is the inverse. This is the yields here. The futures product will look the exact opposite of this. So that's where we are. I think you got to. Hey, Tom Messina, good to see you. Hopefully class went well yesterday. And Gallo, good to see you as well. And everybody. I don't want to alienate anyone here. Okay, let me pause. For some reason, this room upstairs, there's no AC in this room. It is absolutely toasty. I might do the show shirtless one of these days. It's so warm in here. You're going to see beads of sweat. It's not because I'm nervous about doing the show. It's just really, really hot in here. Oh, that's so good. All right. So, more. Let's see. I'm going to go to this question here, and I'll answer some questions that came in. Brian, he says, can you talk about how you use stops with directional options, like your out-of-the-money SPY puts? Is it based on price or a certain predetermined loss? If your stop is based on price, do you use analysis to determine what your loss would be if stopped out? Yes, I'm ballparking it. I'll never know exactly what that stop loss is going to be. But for example, when we look at that S&P, so I'm in SPY, so I won't use the futures product. I'm actually going to use SPY. If I look at that price chart here, there's some fairly obvious levels, and you see these two topping tails. We got 2 weeks in a row where we've kind of hit this 460 mark. Okay, well, I obviously don't want to be stopped out, but I need to give this thing some room. Remember, I'm shooting for May. My options are for May, so let me put a vertical line here for May. And we'll all that April, and it's May. I think it's May 18th, somewhere there. Where that vertical blue line is, that's how long I have for my options to expire, and this is a weekly time frame, so I have a long time. No, I won't do it, Michael. Don't worry. No topless shows. I'm not wearing pants, but you guys don't need to know that because you can't see it off camera. Anyway, at this point, I have a lot of time, so I can't get too tight with it. So to Brian's question, how am I using stops? I'm using stops in the underlier, right? So I have a ballpark. Now that I've added another 15 options to it, if the S&P gets above 4,600, I'll probably look at about a $5,000 loss. Right now, I'm up about, I think I'm up about 12K on that one as we speak. So I'm using that as a hard stop. What I should be doing is moving it down, but because I have so much time, I'm letting it stay at 460. I'll probably reevaluate it next week and maybe move down to some lower levels based off of the daily time frame. So I'll look at this, right? At this point, honestly, this looks to me like I'm in the perfect spot. I got a downtrend from December through January, a nice bounce up, double top, and now it's ripping. And I've got all these factors that sound like it could be real negative. Great. I want to stay in this one. So I'm going to keep my stop up here. Right now, it's going to be right above 460. Okay? Now, you can see my odds of that happening right now, or at least in the next couple of days, are fairly slim. But if we get another big down and we start to challenge these lows, let's say we get down to like the 430 mark on the SPY, I'm going to move this down. I just don't want to give back all this profit. And I have, for those that know, options profit is racks up much quicker if it's going in your favor than pretty much any other asset class. So that's how I'm doing it, Brian, and I know that's very different from how other people are doing it, but mine is purely off the underlier. If that underlier starts to rip and break through a supply level, I can't let it keep running because then the option will be losing a lot more value for me. So anytime I'm directional, whether I'm buying puts or buying calls, it's always going to be off of that supply or demand zone that I feel is going to be the most influential on price. There you go. I've not heard from Brendan Valentine for a while. You're probably causing major... I think he doesn't like this show anymore because I never brought his other friend, Greg Manarino, on. I just never reached out to the guy. So, it's all good. He was always fun on the show, always did great for the program. So, hopefully we'll be back on at some point. All right, so Brian, that was your question on puts. Let's see. We talked about this one yesterday. This was the VLDR. Let me bring up the chart here. VLDR. Right, this is that Velodyne, and he says, I look at a short interest this morning on VLDR, and it went up in January 31st to 26 million short. I believe that the last reading from January was 23 million. I want your opinion, but this looks like the perfect setup for a short squeeze. It looks like they're trying to hold price down ever since Amazon news. Want your insight, just making sure I'm not seeing what I want to see. Rob, I actually love that statement that you said right there. And I think that this should be for everybody, whether it's this program or for somebody else, or somebody else's program. It really pays for you to have sets of eyeballs on something that you can look at objectively, because sometimes we will formulate an opinion about something and we get so concrete that we refuse to accept any other information that might be given to us. Talk to other people, share your ideas, say, here's what I'm thinking, what do you think? And sometimes you actually don't want to ask them, tell them what your opinion is, because then you might sway their opinion, right? If, let's say, for example, you look at this VLDR here and you're thinking, hey, I think it's going to go up. Don't present it to somebody like that. Don't present it like, hey, I think it's going to go up. You should say, hey, here's some facts. What do you think is going to happen here? That way, they won't be biased with your opinion to sway them. They'll be looking at their own opinion. So let's look at this VLDR. Again, the news was that Amazon bought a ton. I forgot exactly the number, but it was a huge amount of VLDR. And when I looked at the long-term picture yesterday, this is ugly. I mean, this thing looks awful. We'll even go further back. Go to the weekly here. It was up in the 30s. This is a horrible chart. It is absolutely catastrophic for anybody who's been holding VLDR. At a certain point, though, the book value or the assets of this company will be worth more than the share price. And that's where some value investor will come in and gobble it up. Now, you have, as I mentioned, Amazon pouring money in. Pretty sure Amazon has a use for VLDR. They haven't really disclosed what it is yet. But somebody pouring that kind of money into this company is a very positive sign. Now, you mentioned the perfect short squeeze. I'm okay with the short squeeze talk track, but the way it jumped up here, if this was a true short squeeze, what should have happened? It should have liquidated people's shorts. This was a giant jump. If you look at how much this thing moved on that news, it went from there to there. It was almost a 30% jump up in value. If there was a lot of people that were margined out and using leverage and didn't have enough free play, then they would have been forced liquidated. They would have had to have gotten out of their positions. I didn't see that happen. So while it looks like it could be a great short squeeze, it has a high short interest, people just didn't let go. That's a little concerning if your plan is this is a short squeeze candidate. Now, I agree with you, Rob. I actually think this is longer term, probably a good security to buy some and own it for a while. Now, I mentioned you guys, some of you sent in comments yesterday about the open interest and liquidity on it. There was some $5 call options that someone was talking about for going pretty cheap. Well, I would put this in my quote-unquote gambling portfolio. This wouldn't go in my stable income fund. This wouldn't go in my, this is the growth fund. This is a gamble play in my opinion, but if you line up everything from my perspective, it looks like it's a higher probability of success if you plan on holding it for a while. So that's what I would say, Rob. I do think you're right. I think that it's a potential short candidate. But remember, we looked at the fundamentals, and those financials are gross. Those financials are disgusting. I mean, they're just losing money every quarter. The revenue's down every month, every quarter. Unless that turns around, this thing's going to keep going down. All right, you can just go to Yahoo Finance. We checked that one out yesterday. Just check out the numbers on Velodyne, and you'll see it does not look good at all. It looks really bad. Long NQ, the 3-hour time frame. You don't look at 3-hour time frames. Remember, part of looking at charts is you want to look at what everybody else is looking at, in my opinion. But I'll look at a 3-hour time frame for you. So it says long NQ 3 hours to 1410 or at 1410. And you're going back to this zone here. I don't know if I would say 1410. 1410 is going to be right where my horizontal line is. You're right in the middle of chop. I think if you're going to take that chance, I'd go lower. Maybe even just 1400 or 14,000. Remember, if you're playing it off this on the 3-hour, there's this zone that goes back into from the 24th to the 28th of January, and it's ugly. It's just chop. So this is not, in my opinion, a decent demand zone. It's been eaten up, which I actually like, right? If we're playing, let me just redo my box here. If we're playing the mindset that this is your demand zone, and you're seeing price come down to it, and you say, I might buy somewhere in there, I got to look at that and say, what orders could possibly still be in here? It's been eaten. If it established it on the 24th, it hit it, took orders out of the system, hit it, took orders out of the system, hit it, took orders out of the system, and rallied. In my mind, there's not much left here, which I love it, because if there's not much left there, that means we're going to start seeking out new lows. And of course, I would love that because I have a bearish position. Now, if I go out and look at the daily, that is this bottom point right here. So you could take a chance and say there's going to be a bounce, but in my opinion, you're going counter trend in the short term. Again, that January sell-off to where we are today is counter trend. Too many chewed up orders in there. I agree, Jerry. Hey, Chris. Good to see you. Nanu. No, that's live long and prosper. See, I think, wasn't Nanu this too? Nanu was this, and there was also live long and prosper. I don't remember which one it was. All right, so there you go, Rob. Hopefully I help you there. Darren asked this question, so I had to just share it. What band did you see last night? There is this little bar. Chris, you'll remember this one. You might have actually been too young to go, but I went with your brother many times. There's a bar in Katati used to be called the Inn of the Beginning, and it was a really cool little. It's a cool little bar. They had a little bunch of beer taps, and they had some food, had an outdoor kitchen and patio, and they brought in a bunch of really cool smaller bands. And the band that we saw there one night was called the Mother Hips. And they were just a really cool kind of bluesy southern rock. Some people have said country, but I'm not a country fan really. But it was really good. So we went there last night, checked out the show. It was pretty good. Another really small venue. But what's interesting is I'm old. Everybody in there was gray hair. This band's been playing for 25 or 30 years. It was pretty crazy. Klatu Vorada Nektu. Well, oh man, now you're throwing me off there, Steve. What was that all about? So that was the band I saw last night, Darren. I'm not sure where Mother Hips is from. They sing a lot of songs about California. I actually saw them at a thing called Rhythm and Brews in Sacramento, which is this amazing multi-day music festival and beers and just so much fun. But that was like 25 years ago. But they're a really good band. Yep. Oh, I know you've been there. Let's see, what else do I have? So we did the out of the money. All right, then let me scroll back here, just see what other questions we have, because I've been just kind of going. I know, what time is it? Oh, 28 minutes. We got plenty of time. Daniel, I believe the Sabbath is coming. Well, if there's a financial bloodbath, I don't know if you guys saw my Twitter today. I had fun with this one. I usually don't tweet out too much, but I had to today on this one. Let me just show it to you if you didn't see it. Here's my Twitter post from today. It says, me looking at the equity market today. That's how I felt. Let it burn. And the hard part is, I know that there's some people whose 401ks right now are starting to just get sucked up. Even though the markets are only down a few percentage points overall, a lot of people expect their 401ks to keep growing. And the people I'm more fearful, I feel the worst for right now, and that might be some of you, is anybody who's hitting 65 and saying, you know what? I'm just about to start pulling out money out of my IRAs and my 401ks. It's the same thing that happened like in 2000 or 2008. If you're at that point that you're just about to pull money out of your retirement account, you've been saving for years, you got this huge nest egg right now, the markets have the potential to erase that very quickly. And again, I've mentioned this. We have the largest amount of paper profits in the history of mankind. Just let that sink in. The history of mankind, not any specific generation, but you notice this monthly here. Yes, there was a lot of money made in 2000, but it was evaporated in the months after that, or a couple years after that. Here's our little blip on the Nasdaq for the 2009 crisis. This is paper profits. These are huge, unbelievable amount of paper profits. So there are some people right now that are loving it. They're like, I might even retire early because I have so much money in my IRA and 401k. Well, if all of a sudden this thing really does hit the fan and we go through hyperinflation, we won't go through hyperinflation, but we get down to here, that means that, let's say we do on the Nasdaq get down to a level like right around 11,000, which would be this monthly really aggressive base rally. That's a decline of 35% of your portfolio. Gone. And really nothing you can do about it. So this is like the ultimate time to become defensive. Be careful out there with long-term portfolios, and go to cash if you have to. Tom says the Olympics end on the 20th. The Russian has the defender in the fatherland. I don't know if there's a good chance that they visit Ukraine. That I don't know. Don't know. Besides the major indexes and oil, what might be affected the most by a little bit of war? So I've always tried to read as much up on this as I can. It's a great question, Tom. And I don't have a definitive answer. I can just tell you what I've seen personally. In our minds, what do we think of war? We think of death, destruction, all this bad stuff, and it's uncertainty. So there's this talk track that markets tank when we break out to war, right? I've seen it happen multiple times, unfortunately, in my life, where we go to a war, whether it's 9/11, Iraq, Afghanistan. When you have an aggressive military offensive, markets generally tank. But they only tank for a few days, like literally a couple of days, like 2 or 3 days, maybe a week, and then all of a sudden they rip. And that's just because when you go to war, it's a great, this sounds awful, it's a great way for a government to stimulate the economy. It's great. Because the government, our elected officials, aren't out there fighting the front line. So we take all these great young men and women, send them out to battle, don't care. Right? Oh, if they get injured, we'll pretend that we care. I mean, I'm saying this from a politician's perspective. They don't have to fight the battles. But what it does is it now creates ammunition and tanks and vehicles and transportation and then reconstruction efforts and all, American infrastructure jobs. It actually creates booms. And I've seen that in every conflict we've gone through. I always thought we're going to sell off aggressively. If we do have an invasion, I will probably close out some of my position a day or two after the invasion if we go to war with Russia, which I really hope we do not. But generally, a couple days of down, and then aggressive moves up. And then it'll probably push us to all-time highs because you have such a stimulus for your economy. Unfortunately, there'll be a lot of loss of lives there. It's really unfortunate, but that's the way it is. Let's see. I hope I didn't offend anybody by that. The Fed going to sell war bonds ever again? Who knows? It was before my time, but you never know. I wouldn't put it past him. I would not put it past him. According to schedule, you would own nothing and be happy. Bitcoin solves most of it. No. What else? Well, I'm losing track of the conversation. You guys have had some good ones today. Oh, there we go. Joe says, when you buy stocks for long investing, do you ride the drops or exit and re-enter after it bounces a bit? Seems like a dumb question, but I guess I need to hear it from the horse's mouth. Great question. So it depends on the objective, right? Some people, if you're going to hold the stock forever, buy the dips. Just keep dollar cost averaging. Personally, I think that's a great way to blow your account. So I would always have a line in the sand. I did this back in in 98, because I didn't learn in 2000. Let me just bring up a chart here so I can help explain that one a little bit clearer. Let's go to, let's say, a daily. And I apologize, I'm going to do a lot of scrolling over here. I'm going to go all the way back into 2000 if it'll let me. Okay, so here's your 2000 bubble. And unfortunately, I don't have enough data to see the big 2000 rally. But just to put that in perspective, when this thing started to fall apart, I realized, oh crap, I've got to get out. So I got out of my long positions because I did have some long-term holdings. And then as it kept falling, I bought some. I bought back. And, I don't remember the numbers. It was so long ago. But, let's say I sold out at 4,000 on the Nasdaq and I bought back in at 29. At this point, I'm like, yeah, I just bought it at a 25% discount. I saved myself a grip of cash. And then all of a sudden, markets kept dropping. Now, fortunately, I stopped out of a bunch of stuff because I did use stop losses. Granted, I made the novice mistake, which is my stop loss is, whatever, $100. It gets to $99.99. You're like, let it go to 95. Let it go to 90. So I let my stop loss run a little bit longer than I should have, but that was just my own noviceness and stupidity. But I think that in this market environment, you should absolutely use stops and be okay with it and say, hey, I've either lost some money or I gave back some of my profits, and then look at that chart and say, where can I buy back lower? That's what you should be doing, right? And we all know the answer. Would you rather buy something at 100 and hold it all the way to 50? Or would you rather get out at 90 and then buy back in at 50? Or buy back in at 60? Either way, you're going to make more and have a greater rate of return by timing the markets and having those specific rules. If you just hold on to something, you end up with a situation like this where you buy this. Let's go to, see if I can just put it on here. So here's your Nasdaq futures. Let's go to a weekly. You end up with a situation where you bought those highs. Well, how long do you have to wait? From March of 2020, you had to wait until 2016 for your account to break up to even. right? That is 16 years of wasted time and wasted opportunity by having a buy and hold mentality. So, if you buy things at incredibly low discounts, yeah, maybe you hold on to them longer. But remember, if you're buying things right now, you're not buying at discounts. You're buying near the highs. Granted, it might be slightly off the high, right? Here's our chart of what's happening right now. If we look at how far we are off as of today's prices, down about 15%. We might hit my 20% pullback sooner than I thought. But yes, you should absolutely, Joe, have stop losses and say, hey, because the odds are higher right now that this trend is going to reverse and go from a bullish trend to a bearish trend for a while. There's just too many factors. Is it going to happen right now? I hope so, but I can't guarantee anything. I'm not like the little donkey trader out of Chicago that I can't stand who will just say after the fact that he did all these things right. I actually put my money where my mouth is, and I'm showing you guys the trades that I'm in so you can see it, because it's one thing to say you're going to do something, it's another to actually do it and put some money on the line. So I was wrong in 2020 because I thought we'd have a double dip. I may be wrong in 2022, thinking that this is the reversal of the bullish trend. If it is, well, I'll be able to boast about it, which I won't really boast about it. I know I don't like to do that, but I'll be happy to talk about it going forward. If I get stopped out, it's just going to be a learning lesson for me. Remember, it's all about money management. I can't afford to lose big, so if I'm wrong, I got to put some stop losses there. All right, let's see if you guys got some new questions. Oh, Alexander, it's nice of you to spam us with your crap. Let's see if I can block you forever. Alexander, where'd he go? Alexander, hide this user forever. Bye. Sorry about that. I had to get rid of some spam. Okay. If I had money, I'd go an F-16 put. Well, defense stocks are obviously one of the market segments that would perform well in this situation. So you're looking at your Lockheed Martin, your Raytheon, Northrop Grumman, those types of companies. We had lost decades in the 30s, the 70s, 2000. Yeah, and I actually did a presentation for Online Trading Academy years ago, which was called The Lost Decade, and it was specifically on that period from 2000 to 2013. So many people tell you, buy and hold, buy and hold, buy and hold. Well, here's the situation that's going to face a lot of potentially you guys right now, which is this, is you can see that this market's been rallying up. So people have been buying. Oh, Ruth, another one that wants to get blocked. Hey, welcome, Ruth. Taylor, goodbye. Thank you for spamming me with your garbage. And you're gone. During this market rally, what have people been doing? I'm going to ask you guys. Come on. During this market rally, if you are invested in a 401k, well, you're automatically buying every month, you have been dollar cost averaging this entire rally, which means you're putting more and more money in right as the market goes through one of the most bullish phases it's ever done. And it looks great for you because it keeps going up. But when you keep dollar cost averaging and you get a sharp decline of 50%, all these purchases up here end up losing a lot of value. So again, this is why I'm so concerned about anybody who's retiring in the next year or so. You could really lose a bulk of your retirement account if you're not properly prepared. Worst case, buy some puts. Just buy some puts to offset. Think of it as insurance policy, right? If you have $5 million in your home, oops, that's not Bill Addis. Hey, look, let's talk with Bill Addis today. If you have $5 million in your home, would you get an insurance policy, or would you get insurance policy at all? Yeah, absolutely. First off, you're required to by your lender, but let's say you weren't required. Yes, you should probably buy an insurance policy. And what should the value of that insurance policy be? To cover $5 million worth of loss. So if you got $1 million in your retirement account, then calculate out how many put options you need to buy on the S&P 500 and know that that's the cost of the insurance policy. So if your portfolio or the market drops 20%, you've offset that. And that insurance cost is a drop in the bucket compared to how much actual monetary value your portfolio would have declined. Do a poll on what exactly... All right, let me save that one. So it'll take me too long to program it in right now. I always struggle with those ones. Ask Bill about those war bonds. Yeah, I will ask him about those war bonds. We should have asked him the other day. What are odds we see another major bear market 2 decades in a row? Probably pretty good. From my understanding and working with so many people in the industry, markets run in 6 to 8 year cycles. We've been in this one since 2009. That's well beyond, 6 to 8 years. So we're definitely overextended. But remember, we obviously have this Fed catalyst. We've got cheap money. And as I mentioned years ago on Power Trading Radio, we will keep money as cheap as possible until it stops working. Because the theory is if you print all this money, you're going to get hyperinflation. But we didn't see it. We saw no hyperinflation. So everyone's like, okay, well, let's keep printing. Let's keep doing it. And then COVID hit. Oh, let's just juice it even more. We haven't had any issues. Thank you, Joe. Appreciate that very much, my friend. Thank you very much. Cheers to you, sir. Thank you for the contribution. I appreciate it. And I like the logo you got there, too. So, you know, all of a sudden, everything works until it doesn't. It's a phrase, and I think that that's what the Fed's going through right now. Quantitative easing, 1, 2, 3, 4, 5, 6. Operation Twist. Keep pumping money in. And they're looking around going, can you guys see anything bad happening because of this? Is anything going on? Oh, shit, keep doing it. Keep going. Now, all of a sudden, we're seeing the bad stuff happen. It's like, you know, it's that video of Homer Simpson as he slides back into the bushes, like, try to hide. We're kind of that situation right now. So, you know, who knows? Again, this is all speculation on my part that this is the beginning of the end, which I actually do think that this is the beginning of the end. Not the end, but the beginning of it. As I mentioned, I think that the high has been put in for the year. I don't think you're going to see the S&P break those highs. I don't think you're going to see the Dow break these highs. It could very easily. Like I say, a conflict could spike this and break it to all-time highs. If we go to war, we'll probably break the all-time highs. Now, it'll be a little couple days of sharp drop and then rally back up, but I'll worry about that when the time comes. All right, what else do we got? How much time? Oh, 42. I'm going to go pour myself a fresh glass of whiskey, which means I should probably wrap this up. So let me show you what happened or what will be happening for Monday. Really nothing for the U.S. As you can see, not a lot, right? It's non-U.S. based. We do have GDP coming out for Japan, which of course will be interesting. They previously had a 0.9% decline, and they're expecting 1.5% growth on GDP, which of course would be good. But Japan's been stuck in this economic malaise for a long, long time, and I don't see them really getting out of it. Some 401ks don't let you trade options. What would you recommend? What I would recommend, Gilbert, would be to go into a money market fund. Go to cash. Just go to cash. Right, here's the best thing about cash. If you go to cash and the markets drop 50%, you're like, yeah, baby, awesome, I didn't lose 50%. If the markets rally 50%, you'll be cursing me going, that son of a biscuit, he told me to go to cash and I could have made another 50%. The odds are pretty slim we're going to rally another 50% from here. So I'm just going probability, right? What are the odds? The odds are very likely that it's more likely it's going to go down in the next year or so than go up. So lock in profits is what I'm saying. If you go into cash, you're safe. Well, safe-ish, right? Still cash, so you're losing to inflation. But that's what I would say. Unless you can talk to your employer, maybe you can go self-directed in your IRAs. In 401ks, normally you cannot go short or anything, but many will let you self-direct. Talk to your HR department, and they may let you self-direct your IRA, which means you can now get into inverse ETFs, you can get into options, futures, etc. If you're an IRA, depending on where the IRA is at, you could do all this stuff. You can buy inverse ETFs, you can do options, but you have to... Should we sell our bond funds? Which one? Like SHY or TLT? Which one's you in? TLT? I think so. Look, if you're in TLT, a bond fund, this is showing weakness because yields are rising. This is the 20-year. So if we expect bond yields to rise, and here is, let me just show you the 10-year before. Here's the, we'll do 30 and the 10. Here's the 30-year, and then here's the 10-year. These both look like the trends reverse, and we're starting to see some upside moves. So if that's the case, that means TLT is going to go down. So yeah, I would say sell TLT. You know, get out of the bond funds, because bond funds are based off of the premium price, not the interest that they're yielding. So as yields rise, those premiums are going to be dropping. No problem, Gilbert. Again, you know, this is just. I'm not financial advice, I have to say that. But, you know, from a risk protection perspective, if you're worried about the markets, then go to cash. It's the easiest way to protect you. And remember, the prices are fractal. Yep, they usually return to their lows. Yep, absolutely. QQQ puts with 15 delta would have been nice to buy around December last year before implied volatility. Yeah, well, it again, Pro 3.5, you know, you said puts on the QQQ would have been nice in December. When's the best time to buy insurance? When you don't need it. So if you look here, you go back to December, these markets are flat, topping out. People weren't afraid. There was no fear out there. So you could have bought puts cheap. When markets are high, great time to buy puts. That's when I started. You know, I've been buying more puts when it rallies back up. Because once it rallies up, the implied volatility gets a little bit better. The options aren't as expensive to buy puts. It's days like today. I mean, the premium was soaring on the options today. It was crazy how much they were spiking up. What else do I got? Skeptic in me says, hey, my domestic policy is crap. Nothing a little... Well, again, I'm not a fan of wars. Nobody wants them. What else do I got? We were also driven by venture capital, IPOs, SPACs, and meme stocks and other things that don't relate to revenue and next profit. Sure, you're absolutely right. But tell you what, if we go into a war state, all your little Robinhood traders that are holding AMC, all right, made a little money today. You guys remember back last year, we were talking about this, and all these fools that were holding AMC at $72 or GME when they were saying it's going to 1,000. And I was just telling, like, short this one, buy puts. People are like, oh, we're sticking it to the man. Look, the man was short at $20. You think they're not going to want to short it at 480? They're shorting more. So, you know, this thing is a dog. It'll go back where it belongs. And unfortunately, a lot of the retailers don't understand that, and they'll be left holding the bag. Go with what's strong. Go long what's strong, short what's not, and then just do what the market tells you to do, period. All right. I think I'm almost done. Tip bonds can provide some... They can, Christian. The problem is, you know, most of them right now are paying negative yields. Now, I believe they've recently come into positive territory. But, yeah, there's a wide spread there. But if we do continue to see rates increase, tips can definitely help there. Absolutely. All right. Yeah. Actually, I think when we looked at it, AMC is a major part of the Russell 2000. Let me look it up right now. Why do you got to see? This is on you, NJ. You start this stuff right as I'm about to wrap up the show. Damn you, I'm almost out of whiskey too. Let's see, 2000. I think I actually had it. AMC is its top holding in the Russell 2000. Let me bring it up here. S&P. Here we go. Russell 2000. Its number one holding as of December was AMC. All right. So that could definitely be helping the the Russell 2000 price chart. Could you draw a yellow box? Where am I going to draw it, Tom? You tell me, buddy. You look at that game. Where am I? I mean, there's no yellow box here that really makes me feel good. I don't know. I mean, you could draw them all over the place. Is this the yellow box? Is this the yellow box? Or is this the yellow box? You know, for me, this is probably where I would move it to, somewhere in here. Let's keep it there for now, Tom. That's for you. That's for Tom. We'll keep that in there. And of course, Chelsea wants to know about Affirm. We talked about it a little bit yesterday, AFRM. You know, you had that crazy day yesterday followed up with another 20% down day today. I mean, I guess the question is, what do you want from it? This thing is at dead lows. It's the lowest it's ever been. Of course, it's relatively new. But this is a daily. You ask yourself, is this the buy point? Not worth it for me to take that chance. I just don't feel like I would take that chance on this one. All right, you guys are getting tired. I'm getting tired too. Oh, how do I get so much spammers, guys? What is going on with all these spammers trying to get you to click on these X-rated sites? Well, Hod's Rumfukiv is gone. Yeah, I love it, Alan. GMC yellow box at 0. Perfect. Love it. All right, everybody, that's going to do it for me. We talked about the economic calendar. There's really nothing on the earnings front for Monday that's noteworthy. There are some on Wednesday. Wednesday is actually the pretty big day for earnings. There are some major names. We'll talk about that on the Monday show. If you guys have comments, questions, feedback, things you want to talk about, email me at TraderMerlin@gmail.com. Although many of you are doing what I think is better for this show, which is you're asking comments or you're asking questions and putting comments down below the video on the YouTube channel. So if you watched it, just go down below the YouTube video. That's the best way to help me out on the show. I think, of course, like, subscribe, share, whatever you got to do. Until then, happy trading, everybody. Cheers. I will see you all on Monday. Go shorts. And by the way, I should have done a poll who you guys think is going to win, but I'm going to say it's tough because I really want to see Matthew Stafford get a ring. He's like a good guy. Unfortunately, I hate the Rams. I'm always going to just say go Niners. So I will have to go Bengals for the Super Bowl. All right, everybody. Have a fantastic weekend. I'll see you on Monday.